So I've asked these four gentlemen to join me on the panel this year. Some of them have been on here before, some of them are relatively new. First timers, we're going to give them a hard time. Chris, just saying.
How are you?
All good. All right. So sometimes we talk about this from a fund manager type level, but today we're going to keep it a little bit more about sourcing inventory. How are you finding inventory? What do you see coming down the pike? And then also about balancing your portfolio, right? And the reason I wanted to talk a little bit about balancing your portfolio is because a lot of times at this time of the year, banks, capital funds, sellers is looking for a way to rebalance their portfolio. They may want to move some product, they may want to move some non-performing product, get their ratios in line, and there's some aggressive buyers out there that may be wanting to have capital they need to deploy by the end of the quarter. They're looking for a deal, right? These guys cover a wide spectrum of strategies and philosophies from an investment standpoint, but they all have been in the business quite a while. And I'm not going to introduce them because it would be better if they introduced themselves and told their story about them and their company. And then I've got some questions that we're going to kind of go through. So Chris, we'll start with you.
Okay. Well, our company is called Kirkland Financial, and we are a private investment company. We're family owned. We're based just outside Nashville, Tennessee. And we are essentially loan junkies. We love loans. We buy primarily non-performing residential assets. We also like the performing residential loans as well. And we even venture into commercial performing loans, and we even have a sort of a hard money bridge lending division as well. So we're always looking for loans to buy. We're always looking for new opportunities. That's why we're here, to meet you all. We would buy seller finance paper. We haven't seen that much of it, but we have bought some and would like to buy more. And so we're here kind of, meeting and networking, as Bob mentioned earlier, and just trying to make those connections and see if we can find new business.
Awesome. I'm going to pass that to Fuquan.
You see those 2 zeros?
It means you're already out of time. Yeah, reset the clock. Give Fuquan a minute 30. No.
I have to admit, I'm a junkie also. This is for like an AA meeting, but Fuquan Bilal, NNG Capital Fund. And our model is a diversified hybrid real estate investing model. I've been doing real estate for 20 years now. Been in the note business for 11 years, since 2011. And now we have a diverse approach where we're buying tax liens, real property, and notes. We have a private fund. We raise capital for those assets, and we're based out of New Jersey.
Good afternoon. I'm Cody Faller. Faller Financial is my business, and had the pleasure of working with Bob and folks in this room for a number of years. And Faller Financial in 2011 was merely an advisory to hedge funds and banks and some private note investors, and then over time developed a lot of additional sources and skill sets, and then ventured into becoming a principal buyer myself. So I have gone through what everybody does when they're building a portfolio, and our buy box is generally first and second lien performing residential paper. We've done some thirds here and there, sometimes by accident, and some non-performing, and pros and cons to each of them, but we really handle the full spectrum from contract for deed to note and mortgage, performing, non-performing, reperforming, subperforming, low value, high value, mobile home, so a lot of different, a little bit of commercial. So we like my colleagues have said, a lot of different types of loans. For us, cash flow is king, and so we're leaning more towards the performing than the non-performing side.
My name is David Polio from SN Servicing Corp. We've been around since 1987. We have analyzed and purchased over $3 billion of assets. And we're a buyer of all types of assets. We really had the motto that, there was no bad asset, just a bad price. So we had purchased first liens, second liens, leases, commercial properties, you name it. If we could put a price on it and make something on it, we purchased it. That kind of created our servicing group. The servicing group has been around since 1987. Today, we service for about 200 clients that have around 40,000 loans on our system. With that 40,000 loans on our system, we're able to then transfer into a new trading desk, which we created about 6 years ago. The trading desk is where we sell the assets for the clients that we service for.
All right, let's see. We'll start with Cody since you have the, let me just say, a lot of these guys up here, well, all these guys up here, we've done business together over the years, bought, sold, referred deals, whatever, and I'm sure they've done deals between themselves. So yes, you know, you're kind of competitors, but I always like to refer to everybody as a counterparty. There's always a way to do a deal, right? I've bought and sold deals with Kirkland. I use SN servicing on some deals. I've known David forever. You know, I get his emails 5 times a day. You know, but I mean, he helps me sell loans. He's bought loans for me. Cody, he's facilitated trades for us. Fuquan's been at, I think, everything but the first NoteExpo, and he usually has a booth. This year he's, you know, going real fast, so he didn't have a chance to get one. But we've done deals. As a matter of fact, Fuquan lives and operates close to where I was born in New Jersey. And if we talk about social media, if you want to know social media, he is one of the masters at it. Follow him on Instagram and Facebook. But he does some rehab work, and he's taken, and I know some of these neighborhoods, and he's taken and done some rehabs, fix and flips and stuff. And I'm like, hey, if you ever have one in Fairlawn where I come from, I'd love to get involved, just a little, you know, give back time to the childhood. So he's got that on his radar, but he does some good stuff in addition to his note portfolio. So that's good. So, you know, Cody's facilitated trades for us, both loans I'm buying and both loans I'm selling. So don't just think when you go from booth to booth that, you know, ooh, it's the same thing with servicers or IRA companies. We're all in the note business, okay? Yes, you compete for customers and stuff, but it's about the relationships, and you'll hear more about that later today. But I just wanted to recognize that I don't want everybody thinking out there that you 4 guys and me were sitting up here and we all hate each other. We're all trying to find a deal and get it before Cody does or whatever. So sometimes what you have, you know, may not fit my box, and I'll refer them to you and vice versa. So along those lines, 2-3 years ago, inventory was flowing. You really didn't have to do a whole lot to find it. You were getting emails sent to you all the time, or, you know, hey, there's a big NPL trade coming down, or we got a bunch of seconds we're looking to move. How do you think you've adapted to the changing environment where not only has the product has changed, but maybe it's more the big guys are swallowing it all up, so to speak, and it's not making its way down to us quite yet? Cody, since you got the mic, we'll go with you.
Yeah, I mean, we've definitely seen ebbs and flows in product over the years. And then, you know, certainly as you talk to other people, you'll hear them say, oh, there's nothing available out there. It's dried up. This market's done. And we just, quite frankly, have never seen that over the last, you know, probably 9 years. There definitely have been times, to Bob's point, where you might be less proactive and you just kind of sitting back and things are hitting your inbox and crossing your desk. And then other times you have to be more out there, kind of shaking the leaves. But I think the product type as well certainly shifted. We saw a lot of, you know, NPL in the market in huge volume. You know, in the 2010, 11, 12, and then you saw a lot of reperformers kind of being the product du jour for a while, and then second liens come in and out of favor. I think in terms of, you know, what's being released to the market, but I think the key is just sort of being you know, omnipresent. Everywhere. I've got a mind map on a big whiteboard, and at the center of that is deal sourcing. And so everything that branches out from there is to support the initiative of sourcing deals. And I'm sure as everybody's having conversations in the room, you're learning that there's oftentimes capital, but the challenge can be more on the product side. So, you know, Fuquan and I were talking about, you know, social media. Certainly, you know, one of my best relationships actually came before I really even knew the business from Twitter. I was just I established a profile, and somebody I met said, "Hey, I don't do what you do, but this guy does," and that's how it always happens, right? It's just a function of networking. So I'd say being in as many places, showing up, and being the type of person that's referable, so that people want to make those introductions. That's the other real key.
Awesome. Fuquan, just you can expound on the changing inventory and environment, but knowing what you've focused on over the years, can you put to rest the myth? I mean, are NPLs gone, or are they still?
Well, something what Dave said is there are no bad notes, there's bad pricing. There's plenty of people from the second space where I started off from was used to paying, 15 cents on a dollar, 12 cents on a dollar. Then when the whole landscape changed and compliance and everything came into place and the bigger guys started buying more stuff and stopped selling it, and the players who were selling it were no longer in the business for reasons I won't mention. I'm pretty sure some of you can know those guys, but that kind of put everybody in the scarcity mode, like where are we going to find product? And they forgot that they had a network of people that they met at these events. I've never seen people at these events send out blast emails to people who they knew to see if they wanted to buy stuff, or people reach out to servicers to see if they had any clients who wanted to liquidate portfolios, or document custodians to see if they had any clients that they can refer them to buy stuff from. Many people don't scrape the assignment trail and create mail campaigns to source. There's so many different ways that you can source and find a product. Even with social media, like we were talking about, you can create a Facebook group to educate and help people get deals that way. I always pick up a handful of notes when I come to these events from the onesie twosie level of people who purchase notes and have them in a drawer. They start a conversation with me, and I find out if they want to get rid of it because it's giving them a problem, and I buy that 1 or 2 loan from them. So there's a tremendous amount of ways to source and find notes. It depends on how aggressive and how hungry you are. That's what the bottom line is of it. With us, as Cody mentioned, we haven't really seen much of a change of inventory because I guess the level that we're buying on, the brokers send stuff to us constantly. It's just what we're willing to buy to add to our current portfolio and the price we're willing to pay. So we still see plenty of inventory. I mean, there's huge trades in seconds that's coming down, $100 million from collapsed bonds and all types of stuff. So what we usually do is sometimes we don't bid against everybody. We wait 6 months. We pull title on a few, figure out where the assignment trail went to, and then we do a mail campaign to them or try to call them or catch them at an IMN event or another event and try to establish that relationship. So we have various ways of sourcing product.
Awesome. Chris, how's your sourcing inventory changed in the environment for the last year or so? How are you guys networking to find your acquisitions?
I would say for us, our primary source of loans is typically the larger institutional funds where we can buy 20 or 30 loans from. And we have pretty good relationships there, so that's been pretty steady. However, we've seen a growth or an increase in private funds, so we try to work and network. And what Fuquan was saying, you really have to build your network and work it. It's not going to fall into your lap. So I'd like to say that to you. You really have to build your network and work it. And so that's what we're trying to do. Of course, this growth in this secondary market, this seller finance paper, with just the information growth, the access, seminars like this, education at your fingertips, we're seeing that market grow as well. And so, that's another area we'd like to tap into more.
Awesome. Dave, you got that mic still down there? Okay. Dave, you run like a trade desk, right? So you're helping
Correct.
people both buy and sell. Talk also not only sourcing inventory, but some of the motivations you see for the people that are either looking to buy or to sell.
Right. So, as they all had mentioned, to me there is no lack of product out there. There's been a flow for the last 10, 15 years of non-performing, reperforming, performing. The assets are there. Where I see the problems is the education side on getting a seller to put an asset out there that's going to be clean enough that then you need to educate the buyer what to do to have a clean sale. That's what's been the big problem. So we do a lot of education to the seller first. Explaining to them right now, here's what we see in the market. Here's where people are pricing these type of assets. What do you need to have a successful sale? Well, you got to have a current valuation. You got to have a clean file, a clean tax and title report, and if you have information about any past due taxes, that's going to help you greatly. So I think that part of it is the most important part because I'm not going to have a buyer if I don't have a clean loan and a clean system that the buyer can go to and make a purchase. So then we jump on to the buy side and explain and kind of educate the buyer, here's the information that you're going to be getting. Go through your own analysis, if you have a certain model that you created to price out the loan. We're going to guide you through the process. And one of the things that we allow is I allow shadow bidding. Because so many people say, well, I kind of like the asset, but I just don't really want to bid it, or I'm not quite sure if I'm ready. Well, you can do a shadow bid. Run your process. Let me know that, I like these couple of assets. Here's where I would have been. It's a shadow bid. I'm not going to give it to the investor to review, but I'm going to go back to you later and say, okay, here's where your bid stood between, these 5, 10 other people that bid the asset. So again, it's more education so they can move forward to the next deal, which helps greatly. And as a client, out of our clients that we service for, it's helpful that we can create and generate all the sale tapes for them and run the process. So again, I don't see any issues with the flow of assets. They're there. It's probably the quality and the process that people are going through that's been a big struggle.
Okay. Cody, you're facilitating trades both on the buy and the sell side. What do you think influences the strategies of the people you deal with on whether they want to buy, sell, or hold?
Well, I think what influences the strategies oftentimes is the capital, right? The capital formation, the availability of capital, the cost of capital. We're very opportunistic as well, and we deal with those same challenges. Sometimes we've got dry powder, sometimes we don't. Sometimes we're raising capital. Sometimes it makes sense to churn some assets. And I think that's where the opportunity also lies, is being in front of people. So today, maybe I'm not a seller, but maybe next month I am. And that's really the key. I think that's part of this conversation here is saying that circumstances change. We often refer to the 3 Ds, and not to take advantage of anybody, but that's where sometimes people need liquidity because of divorce, dispute, or death. And you can be helpful in providing that liquidity in those situations, but you can't predict a lot of those things. So I think it's really a matter of timing. And on the seller finance side, we see a lot of other reasons why people would be a seller as well. It could be there's another investment opportunity, and we know if you're originating a note, and let's just say you originated at 4%, and that's the yield that you're getting. Well, maybe you've got an investment opportunity out there that's going to yield double digits. So you liquidate that note to maybe somebody like us or someone else. So investment, alternative options. That's the other thing that we see a lot. Or somebody's just moving, and they don't want the headache of having to try to manage the asset from another state, which to us isn't a problem, but for somebody that's just originated a note and isn't in the business, they think that's a headache. So, but it's opportunity.
Very good. Chris, what influences at Kirkland whether you guys want to buy, sell some of your portfolio, or especially now at the end of the year, Q4, are you going to hold stuff for a while? What kind of goes through some of the talks that you guys have internally to make those decisions?
Well, I think the key is diversity. So we're always looking to prune our portfolio, make sure we're not concentrated in certain areas, maybe certain value points. So we're always looking at that. A lot depends, of course, on pricing, what we got in it for, what we can get out of it for. Holding a performing loan can be, yes, you're increasing your risk, but you're building what we call seasoning. You're building your cash flows. You're actually adding value to that asset. And in that time period, they may increase their credit worthiness. The value of the property may go up. So you're actually adding value to that asset. So you may want to hold it. So we look at that in terms of what the asset is, where it's located, and try to look at probabilities in investing. What's the likelihood? You can never know exactly, 100% what one asset's going to do. But if you can spread your money over, several assets, the more the better. You can know with a high degree of accuracy, what that portfolio will do. And that's how we look at it in terms of pricing our portfolio and what we sell and what we keep.
I like that term, pruning your portfolio. That sounds like something Cody would say, being the gardener that you are over there. But really, we're talking about making sure you're rebalancing, right? And he said, we have too many non-performing loans. How do we want to get that in balance, whether it's the end of the quarter for reporting purposes, end of the year, or it's just time to kind of move some product. And he's like, we can move some of these seasoned performing cash flowing loans so that we could redeploy them maybe at a higher yield that Cody was mentioning them at. Maybe we bought them, kept them a while, but we really paid maybe what we didn't want to, and now we can get a better deal, so we'll recapitalize that. Fuquan, financial modeling. You ever done any of that? How do you decide, how much? A lot of times, Dave said, "Oh, you got to have a box. What do you want? What is your parameters?" And some people go, "Oh, I just want performing loans." But isn't it more deeper than just that? I mean, how much time and energy building your fund did you put into modeling?
Oh, it's something that we do consistently because the industry changes, so we have to stay adapt to it, and that's one of the reasons why we added other assets in the fund. And what he mentioned when he spoke about pruning and going through that process, when we're looking to buy a real estate deal, whereas the flip, and we have notes that it's been sitting for a while that we can liquidate and use that capital to go buy an asset that we can make a 30% return or something better. We constantly look at that. So we're always doing that. That's very important to constantly look at that through every quarter, especially during this year. We're looking at assets towards the end of the year that we can book charge because we may have some income that we need to offset by that. So we may have had some non-performance still in our books for a while that we may have incurred an enormous amount of legal fees, because that's really the biggest cost right now that I'm seeing going into fourth quarter for us looking at the numbers. How can we book charge off some of that stuff to go against the gains and kind of still make it a win-win situation? So we're always doing it. That's important, for sure.
Awesome. Can I add to that? Yes, absolutely.
Yeah, for somebody that's starting out or could have been at it for some time but maybe doesn't feel the need for an analyst to do some real extensive financial modeling, there's a couple things that I would just encourage, having been in the middle of a few hundred transactions where people are, if they're talking about yield, you got to kind of understand, are we talking about the same type of calculation here, just back of the envelope, cash on cash, interest only times 12 divided by your purchase price type yield, or net present value, or P&I, where it's full cash flow. There's a lot of different ways that you can not be on the same page with somebody if you're trying to get a deal done and you're talking about what the yield is. So a couple different definitions on the yield side. And then, looking at a cash flow stream, a good data tape, as Dave was mentioning earlier, ought to have cash flows 12 months, and you can see the timing of the cash flows and the consistency. So somebody that says, well, we've got 12 payments over the last year, I said, well, how did they come in? 6 mid-year and then 6 at the end of the year. It makes a big difference in the pricing. And then, if you're gonna do a calculation just back of the envelope, interest only, well, did they really make 12 payments that year? Or was it 10? And what was the servicing costs? Is it a $15 a month standard servicing, or is there maybe an escrow account and that's another 15, so it's really 30, and they roll 30 days late, so sometimes in that month it's 50, or maybe they went non-performing and it's really 95. All of those, when you look at the servicing costs, especially, Bob and I have had this conversation. If the P&I payment is under, say, $200, $250, and another one of my colleagues in the room, we have this conversation a lot as well. What's the net yield? And really understanding that, because if it's a low P&I payment on some lower balance, what if that's a third of your net? That calculation is very different as opposed to $1,200 a month and it's $15 to service. If you're a seller, sometimes that's what you're suggesting. If you're the buyer, hopefully you're getting in the weeds on that and really knowing how to model it.
Absolutely.
I'll be quick because it's on your balanced portfolio. What we've kind of catered to right now in our niche is our perfect portfolio for us is we're looking for between 5 and 10 million. And what works for us is that we're looking for just a complete mix. If I could get a portfolio of 1/3 cash flowing, 1/3 just non-performing, and the other third where it's vacant properties or properties, loans that we're just not going to be able to take through foreclosure, that to us is a perfect mix, because then we can take it through the workout group and get those loans to reperform. At the end of the day, our goal is with 18 months is to have cash flowing loans that are paying the warehouse line that we bought the assets with, and we can then use the trading desk to move the assets out that we just don't want to take through foreclosure. So that's completely changed from where we used to buy assets and just hold them for years and years. And we went through 2 of those cycles that we just got stuck, and we realized we can't do that anymore. And so we completely changed our outlook on how long we want to keep assets on our line.
Very good. One thing I like to do when I get the panels together and get these guys from various backgrounds is to let them give me one question that they want me to ask just them. Of course, anybody else can chime in, but this one's, geared just towards them, something that are either, they want to let the audience know or something they really want to make a focus. And I happen to do that to these guys. I'm going to save you for last, David. So if you want to start here with Cody. Cody, what do you feel some common sense aspects of this business that just not that common?
Yeah, great question.
Well, you wrote it. You like that, right? Great.
I was kidding.
So submit me a question. Oh, isn't that a great question?
That's great. That's a phenomenal question. No, but I wanted to share some. In 10 years in working with a lot of counterparties and seeing people that have been successful and people that have been less than successful. I mean, I'll use Kirkland on the successful side as, kind of Johnny on the spot with bids, and you as well. When you really deliver and you're responsive, when you do what you say you're going to do, that's really key. Because people want to continue to do business with you. It's like, I think there's a book, Everything I Ever Needed to Know, I learned in kindergarten. But, with my 5-year-old, we talk about the 4 traits of referability that I learned from somebody else. But one of them is do what you say you're going to do. The other is always say please and thank you, show up on time, and finish what you start. That is sort of common sense, but it's not that common, and that's why you see some people getting the bulk of the relationships and the product and the capital. And so I just think that's really key. There's a guy that's married to, he probably doesn't like to be introduced this way, but he's married to the gal that started Spanx. His name is Jesse Itzler. And I was listening to an interview where he said when he was starting out, he wrote in 1 year 3,000 thank you cards to everybody from the CEO that he ran into to the doorman that at the hotel where he stayed, and just as a matter of gratitude. But from a networking perspective, you can imagine if you wrote a thank you to somebody just for something that they did, that gratitude and appreciation will come back tenfold. So,
awesome. Dave, can you piggyback on that just a little bit as far as expectations? And I know you and I have had conversations sometimes about, can you help me move these loans? And then you come back and maybe the buyer doesn't come through like he should. And that you talked earlier about seller expectations. But sometimes the buyers, they'll bid on 5 loans and really they only have money to buy 2, right? So why don't you kind of talk about the common sense. If you're going to get in the game and you're going to bid on loans, a bid is binding as long as due diligence pans out.
Yeah, no, correct. I guess the first thing is to realize your counterpart is probably a hedge fund that has spent years and years and a lot of money on the assets that they've purchased. So it's their mentality is that you're going to follow my rules or just move on to something else. And so I guess an expectation of a buyer is that when you are looking at an asset to purchase, of course, make sure that the funds are available, number one. Be 100% honest with who you're dealing with. If you're brokering a loan to someone else, just let me or the client know. That's fine. I need to know that beforehand, other than finding out later that the person that you were brokering to decided that they had no interest anymore, and now you have to come back to me and say that you're not interested, and it's not a good flow. And spend the time and money, because again, these are clients that have spent good money on valuations, title reports, a lot of work. And so if you're looking at assets and you are awarded assets at that point, do spend the money to get a good BPO, a good tax and title, so you do have all the due diligence information to come back and negotiate a lower price if necessary. It's just too hard to negotiate a price when someone comes back and says, well, my aunt drove by the house the other day and it looks like it needed a new roof. Can I get it for $30,000 less? I can't do anything with that because I need to have a third-party report that shows you guys actually went out there, had someone with a real license to look at the property and give a straight value on it. So I think it's more of an understanding of, it's not as simple as just throwing a number out there and, thinking that the client is going to cater to the way you're doing through your process.
Awesome. I mentioned earlier that Fuquan is pretty active on social media, and one of the things he does is a podcast. I think it's a weekly podcast. Is that right? Yeah. I don't know how many of you guys may have seen any of Fuquan's podcasts, but I've had the privilege of being on one of his podcasts, and he always asks everybody on the podcast the same question, usually at the top of the show. So I thought it was only appropriate that I ask Fuquan the same question he asked everybody else, right? So Fuquan, why are you passionate for real estate investing?
I don't know who's not. Anybody here not passionate? You're in the wrong place. I mean, for me, coming from where I come from, when I walk into a room like this, I'm always hungry. I'm always hungry and passionate, and the ultimate goal is to turn that passion into profit. That's the ultimate goal. But where I come from in Newark, New Jersey, I grew up in an area where it was a blighted community, a lot of vacant, abandoned houses. So when I had the opportunity to get into the real estate game in '99 and learn how to flip properties and start to rehabilitate the community, that gave me a feeling of importance. And I was making money. So I was like, wow, this is great. This is hands-on, developing a community, making a place better. And then when the market crashed and I was able to get into the note business, it was the same thing, being able to facilitate a better situation for the homeowner and give the homeowners reprieve, because the banks wasn't doing it. They was foreclosing. There was a lot of bad press, and then they started to sell a paper, and I had the opportunity to be on the receiving end of that and share my discount with the borrower. So those things gave me the feeling of importance and fueled my passion. I mean, I'm still now, every day I wake up excited to go out and make another deal happen, because I know there's opportunity out there. I'm helping the townships put properties back on the tax roll, and I buy tax liens, helping homeowners stay in the house, rehabilitating communities. That all makes me feel great, gives me a feeling of importance, and that's why I'm passionate. I'm always hungry, always. 25 ain't no breaks. So I come on social media and I do stuff on social media to help people. One of my goals, and somebody told me it was too small at the beginning of the year, was to help 1,000 people learn more about the note business or real estate business, and I help a lot of people hands-on. I do a lot of my own social media. Of course, I have VAs help me with email blasts, but social media, I'm really hands-on, so I can help that person, whether they're a newbie. And I find it easier just to do a few texts than spending an hour meeting someone in person. So I'm passionate about it, and that's a way for me to, help out and keep that going with the junkie stuff. So it's like rehab.
Awesome. Chris, tell us what Kirkland's main business channels are and what you might see as we head into 2020.
Well, like I mentioned earlier, we love notes, period. We primarily buy non-performing residential notes. We will buy performing residential notes if we can find them. We like commercial loans that we'll put on our books and just clip the coupon. And so we're actively across the country looking for assets to purchase. I would like to say, just feed off these guys up here, because I was trying to think of what can I say, sort of a nugget of wisdom since you're here. And you've heard from these guys, there is plenty of volume out there. Even in this incredibly strong market, there's plenty of volume. And the things that will make or break you guys, none of them have to do whether the market's in a correction or going straight. It's desire, it's opportunity, it's drive. And then the one thing, the few people I've known that have really been successful, it's the ability to act. It's the ability to act. And I just want to pass that on to you. I know it may be obvious, but I think so often, you have to eventually take that step and grow and learn and just, get in the game, as they say. In terms of what I see moving forward, I'm always hesitant when I hear somebody portray the future, but here I go. Just from what we see so far, I see technology, you see crowdfunding. I mean, it's transforming investing as we know it. You see the lending industry changing. I mean, what Quicken did with Rocket Mortgage, for example. I mean, the idea that millennials and younger generations would drive to a brick and mortar building, sit down for 3 hours, go through 300 sheets of paper, sign 20 times for an application. I mean, they're going to do it, within a minute or two on an app. And that's also in the secondary market that we're in. I mean, we're seeing just a change, an incredible access to information, and an acceptance of the secondary market. And then when you take into account demographics, I mean, you see people living longer, much more active, and need to earn in retirement. So there's a need for it's another way of investing, people taking advantage of their own IRA accounts. So I see the industry growing tremendously in the future.
We'll work our way back to Dave, but Fuquan, what do you see 2020 looking like?
Well, 2020 for us is we're really trying to hone in and craft our skill on this diversified approach that we took the leap of faith on. And a lot of people say, hey, what do you specialize in? I thought you did notes, so I see you doing real estate now. So we have great asset managers and we have great teams. We built processes and we're always tweaking that stuff. So 2020 is just refining the process and trying to really work on managing all the data that we're getting in from our vendors and really setting up in our CRM and making sure that that's all going. That's always a challenge, is scalability. As you grow, for us, that's been a challenge over the years. Because you always need three things in a business: is to be successful, is to be able to scale, have the capital, and be able to source the assets. So managing those three things is very important. So we're working on the scalability part for 2020 and make sure we refine the processes.
Awesome. Cody, 2020, what do you think?
Yeah, I mean, we spend an hour every Tuesday afternoon thinking about the prior week, and come the end of this quarter, we'll be thinking about this last year and how to not do what we did last year, but be on the plan to. And I'm mentored by a guy in Toronto, Dan Sullivan, that it is really all about 10x growth. So everything that we do, we're thinking, is this a 10x activity? Is this a 10x mindset? And so the return on energy, the ROE here, is going to be a big focus for me. And I don't care if it's first lien or second lien. I like cash flow, so it'll probably stick with that theme. But we're really looking to do more with less, and I want to make sure that I'm really identifying where the bottleneck is, where the constraint is in the business. And if it's me as the CEO, then I need to think about my delegation skills. I need to think about, am I being a good problem solver, and do I have the right team around me instead of having control on everything? So infrastructure-wise, I mean, this is less about product and it's more about what we want. Ryan Parsons mentioned, the why. Are you doing what you're really passionate about? The unique ability, what you do exceptionally well and that's energizing to you. If you're working in that much more of the time than less of the time, and everybody around you is doing that as well, and their unique ability, that's a strategic coach, Dan Sullivan theme. Didn't come up with it on my own, but it's something that made a huge impact for us. We quadrupled the size of our portfolio since February. We doubled the revenue in 19 versus 18, and as I said, we're planning to 10x that. So 10% growth is where a lot of people's minds are at. 10x is 100 times that. So it's a whole different landscape, and we're going to have to make some radical decisions. But it's like Quincy Jones says, we don't have problems, we have puzzles. And we have to figure it out. So that's the big thing.
Big change. Instead of 50 emails a month, I'm going to ratchet down to 49 probably. So it's going to happen. We're still going to have, for the last 7 years, I'm telling you, it's 250 assets, opportunities every month that we've been putting out there. Some of them have been 300 to 400. Sometimes when it's like 10 loans, I get emails asking me if I'm okay. Are they off the list? It's just a little low. But no, I still feel that you're going to have an opportunity to look at 200 to 300 assets, whether they're first liens, second liens, REOs, every month.
Awesome. Yeah. I didn't ask you your one specific question. Are you
now,
ready?
that last question that you were going to ask me, I kind of feel a little bit different with him sitting there right there with the Chiefs.
He's like,
if he's asleep.
Just ask me.
Is he asleep?
Dave wants me to ask him who's going to win the Super Bowl.
Who won it last year? The Patriots.
The Patriots, all right?
I felt a little bit confident.
So, yes, Dave is from New England, and he lets it be known. You have your phone on you?
Oh, yeah. Oh, you can't see that.
He's got his little Patriot logo there, so he's ready to roll. So I want to thank you guys for joining us on the panel. Don't run off, stay there just until we finish up. But we're getting ready to take a break. I know it seems like we just got back, but we have a full afternoon starting with Nathan Long. And as we roll into our break here, we like to recognize who sponsors that, and we just so happen to have the afternoon ice cream break. If we'll give them one more 30-second plug on for the last 3 years, 2 or 3 years, Fowler Financial has been the official ice cream of NoteExpo. And any of you guys that know me know I love ice cream, and Cody has been generous enough to say I'll sponsor that again this year. So we do want to thank him. So make sure when you go out there and get the ice cream, you thank him and Rebecca at his booth. And Dave and his team have a booth. Chris and his team have a booth. Fuquan, for the first time ever, he's just walking around networking. So catch up with these guys. Thank you for being here. Cody, tell us why you decided to be a sponsor for this great event.
Yeah, well, I mean, I think it's the content and the quality of the people and the interaction and the learning. Not to throw another quote at you, but they say if knowledge is power, then learning is your superpower. And what I have found at the booth just in the last few hours today is different strategies that are way outside of my box. But I'm thinking, how can there be some sort of cross-pollinating here? And hopefully we're doing the same for you as well. So love to hear from you and see you at the booth.
All right, awesome. All right, guys, if you'll be back at 3 o'clock, Nathan Long with Quest Trust is going to be on stage talking about real solutions to real problems in buying notes in your IRA.